Exchange. Bob Pisani at the New York Stock Exchange. Steve Leisman is at our headquarters back in EC. Rod Smith of Riverfront Investment Group is with us, and so is Paul Schatz of Heritage Capital. Steve, this is your wheelhouse. Global slowdown or not, what do you say?
Little doubt that there is a global slowdown going on, but I just want to caution people out there, especially the bears, not to double count. What we've had is we had this very slow Chinese trade data. We do seem to be reducing Chinese expectations for growth, 7.9% down from, say, 8.1. But take a look at the Chinese trade data, and you can see it's slowing there. But what is this reflecting? Is this reflecting weakness from Europe and the United States? You can't double count that. Chinese trade data and Chinese economic growth is a reflection of what's happening elsewhere in the world. Remember, it's more of an input to the world economy more than it is an output. And I think the key question, especially next week, what I want you to keep your eye on, Tyler, is the retail trade data. It's been down for 3 months in a row, and the big question for the world economy, U.S. consumer incomes have been higher, but spending has not been. If there's any saving grace now for the U.S. economy, it's the potential for greater U.S. consumer spending.
You know, I guess my question, Rod Smith, is how much of all of this is priced into the market? You know, we've had some momentum on the upside for stocks, even though we've seen these signs of global slowdown, particularly even in the United States. Do you think this is priced into the market already, or will this be a surprise second half of the year?
I think the opportunities for surprise are mostly to surprise very, very gloomy investors to the upside. I think I was asked to come on the show to represent the bull case, and the pathetic thing is that in order to be a bull of the stock market, you really don't need to have much growth in the economy, and the new normal, which is 1 to 2% growth in the U.S., 7 to 8 in China, and not much in Europe. If that can persist, and I believe it can, that's all you need for stocks to be able to go higher over the next 6 to 9 months, Maria.
Paul, is there any reason that we should expect a rally in the market between now and the year's end, or really the election, or is it basically going to be a treading water kind of scenario?
No, Tyler, I think stocks on balance are going higher, and I think Rod's right. So much of the negativity, and it's not hard to be a bear, certainly economically and especially globally, so much is priced in the markets. People really, you have to separate people's views of the economy and the markets. There is value. I know about value traps. I think you just got to be careful. In a normal presidential election year, you have this summer rally. We should have a decline at some point in September and October for a better buying opportunity, and then a run right into year end and before the first real trouble begins, I think in early 13. Economically, I think it's a total different story.
Debatable whether it's a regular presidential election year, I suppose, and the market has been going up 5 weeks in a row. Bob Pisani, you were pointing out earlier that there's a rather healthy sign of rotation going on today.
Yeah, it's a little bit strange because not only you got weak exports in China, but the bank loan demand's at a 10-month low over there, and so you got weak exports and internal demand is weak, and I think the reason we're not reacting in a kind of negative way, and I think this is very negative news, I agree with Steve, is they're expecting the Chinese authorities to do something. They're expecting more stimulus, reserve rate requirement cuts, infrastructure spending, just like they're expecting the ECB to do something. They're expecting the Chinese government to do something.
Bob, I was going to send you an email, but since I get to talk to you live, I'm going to take advantage of it. Ed Hyman wrote a piece essentially saying, beware of rallies bearing low volume. Yeah. And he says he's very skeptical of this rally because there is no volume behind it. What do you make of that?
Well, there's been no volume behind anything for the last year and a half. We stopped talking about the volume. Look, this has been the best week for risk-on, for cyclical stocks in a while. The more defensive names have sort of taken a backstage. Now that Mr. Draghi has gotten a little more aggressive in laying out a path of how they'll do bond buying. So a lot is going to depend on what's going on in Europe. But there's no doubt that central bank interventions is helping to prop up the markets globally.
Paul Schatz, what do you make about that? We have had very, very low volume numbers for a long time here, and we've been commenting on it, the fact that the rally looks good, but there's no volume behind it. Does that bother you?
It doesn't. During the summer, we only get big volume on the downside. It's almost impossible to have a summer rally that's accompanied by tremendous conviction and volume. I think that there's some kind of fallacy that we should have taken out and shot long ago. So no, it does not surprise me. Does it worry me? I'm always worried, frankly. But I think the big key is there's a lot of air under this market expecting QE3 from the Fed. Jackson Hole's only a couple weeks away. Draghi better come through. So far, it's only been jawboning. If the longer he goes without action, the more the markets will suffer. And I agree, China is next to ease monetary policy as well. There's a lot of air under here. These central banks better follow through.
All right. Thanks, everybody. We'll keep following it. Ty.
Thank you.
All right, gentlemen. The world's most valuable sports franchise getting a lukewarm response to its IPO here today. That's right. The soccer team Manchester United, worth more than the Yankees or the Cowboys, and maybe even more than the Dodgers just sold for. Amanda Drury is at the Real Time Exchange with the details. Mandy.